Welcome back, friends. Welcome to the Trade Speakeasy. So over the last couple of days, we've been running a survey asking people what their questions are about the market, about sector rotation, about different strategies that they're putting on that maybe haven't been as successful as they had expected or weren't as profitable. And one of the two key questions that kept coming back was, how do I find the trend and how do I understand market sentiment? And I think that currently what's happening is that there are a few corners of the market like tech and financials and consumer discretionary, your Amazon, your Tesla, where people have been consistently focused over the last few years, and also with communication. So like your Facebook and Google. And right now, XLY, XLK, XLC are really having a lot of difficulty. They're essentially now turning into downward markets. So people have been trying to find a trend while looking at the same underlyings over and over again. And actually a clear trend has not been set because they were in a bullish trend for so long. And now they've really moved into more of a consolidation and now moving into distribution. So now we're seeing a lot of downward activity after some consolidation. And so the reality is that in choppy markets, you're not going to find a clear trend. And it does take time if you are moving into a bearish market, even if it's just a cyclical bearish market, not an entire bearish market, but that you're just in a bearish cycle within a long-term bullish secular market. And what people are having trouble is really thinking about, like thinking outside the box really, and finding areas where there is a clear trend, either a strong bullish or a strong bearish trend. Because what I realize is a lot of the people who are asking me about, how do I find the trend? They're really trying to execute very directional type trades. So either long calls, long puts, or a kind of a debit spread. And so because there isn't a lot of the stocks that they're looking at don't have a consistent bullish trend or bearish trend, they haven't been able to see the profitability that they're used to seeing. And so they think it's because they haven't been able to set the trend correctly. And really what it is that they're trying to enter in areas of the market where institutional investors aren't busy investing. Either institutional investors have been slowly trying to reduce their exposure in areas such as tech, such as consumer discretionary and communications. And so that's why we're seeing this kind of slow grind down, because institutional investors aren't buying up new inventory, and actually they're putting inventory slowly back into the market. So we can look at something like a Bank of America, which is in the financial sector, and we can see that we're kind of moving, like pinching into a wedge. So this is a weekly chart, and there is something called the average trading volume, and it's similar to the volume that you see at the bottom of your charts normally, but this is giving you the trading volume for the day. But when you look at an average trading volume, it gives you a smoother glance as to what the volume is moving in and out of the underlying. And so something like a Bank of America, where we can look back and see where we had really strong bullish trends. We had a lot of trading activity. And then even back here during this bullish trend at the beginning of 2020 on this weekly chart, we saw that, Bank of America was trading near above 400 million shares. And right now we're seeing about half of that. So even when we're seeing these uptrends, they're not really supported by that significant amount of volume. And if we are going to see a consistent move in any particular direction, first of all, if the volume is not higher than average, then we need to see more consistent green bars than red bars. But at the moment, we're seeing an equal distribution between red and green bars. So we can see that at the moment, the volume is undecided. So something like a Bank of America is also, even though it's in the financial sector, But even financials is having some difficulty because a lot of the fintech needs, doesn't do as well during inflationary markets, where other financials like your actual banking sector tends to do much better. But as a whole, financials have also had some difficulty recovering in this inflationary environment. Also, we're seeing the same with Amazon. I have a lot of people who just love trading Amazon. But you can see that when Amazon has had these bullish trends, that first of all, the average move is tilted towards green, but also the volume that is moving is way up here at the 47 million. And right now we're barely seeing Amazon hit 15 or 16 million shares per day. And part of that's because right now Amazon is just valued so high that very few retail investors can give themselves this kind of exposure to actually be moving volume. And so even though we have had a couple of weeks where we've had some significant, bullish momentum and some significant buying, it hasn't been well sustained. So we're again down here, you can see that we have an equal number of bearish weeks and bullish weeks. But in order to have an actual trend, you do need to see either like really high trading volume. And in that higher trading volume, you're seeing red or seeing green, or even when you have this lower consistent trading volume. So like, for the last year, Amazon has been trading around 16 million, but this means that people are basically equally trading in and out. And that doesn't give you a trend. But now let's look at something in the energy sector. So ExxonMobil, XOM, you can just see that during this bearish market here, where we were just consistently trading below the EMAs, we had very low volume. But then once we started seeing a bit of a turnaround in the markets, so I would say more around the October period, we're starting to see significant amount of green volume. And like week on week, we're keeping that volume. And then of course, you always have options expiration dates, and you have people who are trying to take profit, people who were maybe invested way back here in ExxonMobil, and now are starting to see their shares come like closer in the green. And so maybe they want to reduce their exposure. But all in all, this is where you are seeing trend. This is where you are seeing institutional investors. The reality is that, retail investors alone cannot triple a market volume. This is institutional investors. So if you want to see where institutional investors are trading, you want to see this huge uptick in volume, especially when you have an underlying that is around, is under $100 a share. So this is relatively inexpensive. It has a low entry point. So even wealthier retail investors could actually give themselves some significant exposure, positive exposure, and get those dividend payouts on something like an ExxonMobil. Now, if we go back and we look at something like Apple, you will see the same thing. So Apple also has a relatively inexpensive entry point at $167 right now. But if you look back here, when we had this really strong bullish movement from Apple, we're really trading up here between 6 and 800 million shares. And right now we're just at the 400 million. And so that is showing you that that aggressive institutional investment, institutional buy-up is not really happening. And because we have slightly more green than red on the bars, so it is tilted towards bullish, and we are stacked positive on the EMAs. But the risk right now is that if you want to buy, you really have to be a buy and hold. You have to be willing to hold on to whatever shares you buy at 160. You have to be willing to hold on to them for the next couple of years at least. Because the reality is that at the moment, there are no institutional investors to keep this propping up in a bullish direction. I shouldn't say no, but we're not seeing new institutional investors come in to Apple at the moment. But if we start trading above about 500 million on average per week, then we're going to start seeing some better movement. And that will help us develop a thesis about our trend. Now let's move on to another sector. So one of the things is that we talk a lot about SPX and we talk a lot about NDX or the S&P and the NASDAQ. And right now, neither of those are doing very well. NDX, we know, is trading, is now moving into a bearish cyclical market, and SPX is likely this week is going to turn negative. But the XAX is doing really, really well. And that's because this has exposure in areas more relating to commodities and in oil and energy and exploration, and has really been on a very strong bullish trend. But we hardly see people talking about the XAX. And so some of the underlyings that are trading in the XAX are things like LNG, which is Cheniere Energy, which has been an absolute outperformer in the energy sector. And as you can see, I mean, again, what I'm saying about institutional investors, during this sideways movement, we see that the trading volume is quite low. It's trading here now like between 1 and 1.2 million per week. But now that we have had a much more like a strong tilt towards the bullish side, we are seeing it trade closer to the 1.6 and 1.8 million. And this is not an overly exhausted chart. So this isn't just like overwhelmingly consistent bullish movement. We are having weeks of consolidation in between. And so I think that this is actually a chart that, too bad we hadn't talked about this before, but it was in the energy sector. I had been pointing you guys towards energy, but LNG still seems to be an outperformer in the energy sector. And we are still seeing that higher volume trading, which should give us confidence that industrial and institutional investors are trading with us if we are trading such underlyings, opposed to some of the underlyings of the XLC, XLK, XLY, that consumer discretionary communications and tech sector. Then also looking at gold. So right now, new gold is also held in that XAX. And in a high inflationary environment, both gold and silver tend to do really well. So at the moment, because of the environment, the economic environment we're in, people are really expecting that gold could do really well. So of course, and as we're seeing, this is a huge increase in volume, and moving up to 45 million, trading 45 million shares a week. So, and this obviously has a very low entry point. So anyone could get some exposure to gold. And we're now flipping the EMAs positive, which is great. Because as we've seen back here, when we had some positive momentum to the upside, we were trying to push through all those EMAs that were kind of overhead. But now that we've stacked the EMAs positive, that is going to give us a bit of support. Of course, we do have to be careful because we do have overhead resistance here at the $1.20 and at 220 and 240. But if we continue to have this strong amount of buying volume, then I don't see any reason why we couldn't push past that. And then we could be reaching new 52-week highs at this $3.40, or even up here at the $4. So the next thing that we can look at is there's another sector or another index that we can look at, which is the TSX. And that is actually a similar composite to the S&P, but it's actually with a bit of exposure in the Canadian markets. So this also has had a really strong bullish trend. Yes, it's had a bit of consolidation, but to be honest, this is much more constructive a chart than either the S&P or the NASDAQ. I mean, we're seeing that it's just continually having this outperformance. And even now we do have here a lower low and we have a lower high. But I think that all in all, that this is a much more constructive chart because we still have all the EMAs flipped positive, and we are sitting at those at the around the 100 period moving average. So I think that this is something that we could look at and see if we can find some more relative strength. And even if you didn't want to invest in an index or sell against an index, if you are selling credit spreads, you could always look at the top holdings in the TSX and see which ones have had some positive change. And that's really easy to do just by Googling it and Googling the composite, and and then looking at the percentage change and seeing which ones have had the best outperformance. Now, something also about the XAX, which I hadn't mentioned before, is that this is really looking at small caps. So for most of the companies that are inside the XAX, they have a relatively low entry point. So even for those with smaller accounts, the underlyings of the XAX or the holdings of the XAX composite are relatively good for those who are looking for lower cost companies or shares that have some outperformance. So I think that that's all for now. But the big point that I hope that you've heard from me is that you have to start doing some research on what the average volume is and where you see these outperforming months of an underlying and you see the high volumes. That's where you're really seeing institutional investors supporting a bullish or a bearish move. So either they're coming in and they're buying up shares, or they are distributing. Essentially, they are getting rid of the shares that they are holding, or they are putting on really strong hedging positions like long puts, which are then, pulling the price essentially down. It makes it too heavy for the market to have a really strong bullish move when you have a heavier leaning in long puts than long calls. So if you want to find those areas of the market where institutional investors are engaged, you don't want to see low volumes. You really need to see higher volumes, that increasing rate of volume, like we saw with ExxonMobil, where suddenly, you have almost a double, triple movement in the volume. So I hope that helps. And I hope that gives you a bit of, a bit of more thoughtfulness to how you are setting up your supply and demand zones or your support and resistance areas, and then giving you that sense of reassurance that you are actually trading with institutional investors instead of just trading with other retail investors, and seeing that outperformance or those rapid increase in volume. That is a really great sign that institutional investors are participating in the trading of that underlying. But when you have that flat volume like back here, then it is difficult to have a conviction that institutional investors are sitting behind those movements. All right, friends, have a wonderful day, and good luck on your trading. Bye for now.